Yes, and let's start with the big boy of all, and of course it's about to get bigger, Anheuser Busch Inbev. It's the world's largest brewing companies. It, of course, came out of Brazil, then bought its way into Europe and the US, and accordingly now has brands like Budweiser, Corona, Stella Artois and Beck. Those are European brands, the last two. Over in Brazil, they've still got all those things like Brahma and some of the other brands, Antarctica. I tasted them when I was in Brazil at the end of December. Delicious, I must say. Market capitalization currently $203.44 billion US dollars. Price to earnings ratio 54.5, reflecting a whole lot of corporate activity there. Dividend distributions historically showing up as 3.6. But let's start with this. Is the deal to buy SABMiller going to go ahead, in your view?
I think it will go ahead, yes.
Seems so.
Yeah.
And they're acting like it's going to go ahead.
They're going to pay the £45 for SAB.
Yes.
But now, when you look at AB InBev, 79–80% of their business is North America and South America. They essentially nowhere else. They've got 10% of their turnover comes from Europe. They are the Americas. Hence buying SAB.
Which has got Africa and which has got more in Europe.
More in Europe, and it's got a bit in China. But then they buy the company.
It's got South America, but it's got the part of South America that they don't have. It's got Colombia and Venezuela or whatever.
Something like that. But now they're buying SAB, but to comply with all the competition authorities, they're selling off half the SAB brands and getting cash in.
They're selling Grolsch, they're selling Peroni, all that European stuff to Asahi. They're selling in China, which is a huge disappointment.
That's the big one, is they're selling in China.
But they do have a smaller player in China, Harbin, but they had to sell their way out of China Snow, which would have been better to hold.
So they're getting less than what they anticipated. I'm pretty sure about that. Now, why? That's the first reason why they did it. The second reason why they did it is they've had stagnant earnings for years. I mean, you look at the share price now, I'm sure. This thing's tracked sideways for years, so they were battling.
Specifically in North America, Budweiser. Well, there's the chart. Look, it doesn't look so bad. Yeah, look, it's sort of going up.
It's been sideways for 2 years now.
Yeah, no, that's fair. You're right, because there's
no movement there. Earnings have been flat since 2014. Earnings have been flat, in fact, slightly negative. And volume growth, 1%, relatively poor.
Brazil
bit of margin,
not doing well.
Yeah, a bit of margin under pressure. I mean, obviously even though North America is bigger, Brazil is still obviously one of their major areas. And I mean, Brazil's in full-blown recession with political turmoil like you cannot believe. I mean,
I saw a lot of people drinking in Brazil.
Maybe you still do.
It's a very popular activity.
Yeah, no, maybe you still do. But Anheuser Busch had to do this deal to go to
and they are hard-charging guys that know how to use leverage. They're known to be very skilled operators. Carlos Brito is a very good guy at cutting costs and all that sort of thing.
They're not good. I don't know how the cultural fit's going to be, because they are distinctly more ruthless than
what you seem to be implying, though, then, is it seems like a mega deal to end all deals, but in reality, because of the sales, it's less than you think, and it's probably likely that AB InBev will go and do another deal after this one.
I don't know who's left to do a deal.
Well, there's talk they may have a go at Coca-Cola and get into bottling of Coke as well.
Look, you don't know, but look, their balance sheet, even though they've sold off a lot, their balance sheet, which to their credit can absorb it, is going to have serious debt on this deal. Now, I've no doubt that a 10-year story is good. This deal's good for AB InBev. But shorter term, they are paying. Look, I thought SAB was quite expensive until they paid 40% more than the current share price. So they are paying a massive premium. That price-earnings ratio of 50 there, that doesn't look right, because...
forward, I guess you'd have to recalculate it. But in any event, whatever it is now, it's going to get scrambled.
It's going to get scrambled, but they're paying 40-odd PE for SAB. And SAB's large part of that's emerging markets, weak currencies that have had
Africa
a serious tough time.
Looking a bit wobbly.
I don't know how they are not going to get quite big earnings dilution in the system for the first couple of years of this SAB.
Well, let's talk about how it trades here, because we actually own AB InBev in our local portfolio, because when the first opportunity to do so, because remember, all credit to them, AB InBev came to Joburg, listed it here to make the South African institutional investors shut up and stop moaning.
Make a swap into it,
So now we've got it, but since then it's sort of stable in Europe. There's the local graph. Yes, they're going to put up the local graph. And that's done that because that reflects the movement of the rand against the euro or the pound or whatever it is that thing trades in.
Look, and
so what is to be done? Are you hot on this one? Would you be buying it in local markets?
Not at these valuation levels. And that's a combination of, I think, the shares, it's going to choke on this for a while. And I still, despite all that's happened in the last 2 or 3 weeks, I still think the rand's undervalued. So No, I'm not hot, Joe.
You think the rand is undervalued, so you think it could strengthen some more.
Yeah, which will obviously put pressure
Yes.
on these type of shares.
Look, and I must say I'm coming around to that view as well. We own the AB InBev because it seemed like a fun thing to do, but all I'm seeing is stories about how they've got a lot of eating to do before they get out the other side.
Look, longer term, I've got no doubt, because they were going nowhere in with what they had.
Yeah.
They had to do a deal, but to pay a 40% premium and then sell off half the premium brands and growth
Yes.
potential,
Yes.
I would worry about that.
Okay, so we're going to go not hot on this one.